Hi, welcome to the Market Alert for Friday, the 22nd of November 2024. So mega caps mullered as Bitcoin, bullion and big shorts burst higher. Bullion and Bitcoin beat Jensen and Jobs with small j. And other news, stocks and bonds chop to geopolitics. Of course, that's getting worse. The UK is now implicated into this as well. Economic news for today, we've got retail sales from the UK at 7 a.m. and then it's all flash news there, apart from we've got Lagarde speaking there at 8:30 as well. So watch activity in the DAX this morning when she speaks there. Right, let's have a look at the markets for yesterday and kick off with the Dow. So yesterday the Dow screaming to the upside. You can see the increase in volume over the last few days there. Price is moving nicely higher, going back to the all-time highs, which will have no problem in achieving. And as soon as Trump gets in, the markets will continue to move higher. The only thing that's going to stop these markets from moving higher is the N-word. We've had wars for the last 1,000 days. It was a 1,000-day anniversary yesterday for the Ukraine-Russia war. And it's made not one jot of difference to the markets apart from keeping them moving to the upside. So without something devastating, and I'm not forecasting it or recommending it, it's you just look at the markets, they will not stop going up. They have pullbacks, granted, but you can see the impact that it had with Trump being elected. We've had the pullback, and now we're off again. So at the moment, 44,556, that sort of area, or 44,000. There, if we use the all-time high, 44495, 50,000 won't be unacceptable by this time next year. And that's, of course, if we're still here, as this escalation with Russia and Ukraine. And now, like I say, in the headlines that the UK is now implicated in this as well. And there you have it. Putin warns US and UK. So we're being dragged into this whether we like it or not, but that's generally the case with these elites, isn't it? So there it is in black and white. Right, let's move on, have a look at the DAX. And the German DAX also, you can see lots of volume over the last few days as well, pumping this market again, ready for the Santa rally to move the markets up all the way through November, December and into January to secure the bonuses, because that's far more important as for the bankers, and war as well. They're always bankers' wars. So yeah, everything setting up beautifully there for the markets to move higher. No crash in sight, unless of course an N missile is actually used. Markets heading back to 19,679. And in the 30-minute chart, you can see yesterday we had a bit of a sell-off to begin with, down to the low. We went below the low, certainly by 50 points there. But again, you can see the climatic volume action. You've got it's oversold, and then off we go, moving all the way back up. And then we pick up again with the US through the cash market opening at 2:30, and then overnight the market's already taken out yesterday's high there as well. And in the S&P 500, this is also moving back to the upside. Let's draw in some fibs on the upside for this market as well. We've gone through 38, we've gone through 50, and sitting at 62% retracement area there at the moment for this market. So again, 6,027 is back on the cards. Again, climatic volume, we were oversold, and the market is now free to move back up. And in the 30-minute chart, we moved down a bit, nothing like the DAX did, and then up, and then we had a shakeout with the news at 1:30 with the opening selling, and then the market back up and heading back towards yesterday's high overnight. And the FT100 now gathering pace to the upside again. We've got some nice volume here. You can see that there's new money coming into the markets, and we've just got to take out that 200 MA and head back towards this first point here, down to here. Let's find the low. We're back at 62% retracement there as well. Reeves is forgiven from the markets, and we're heading back up. And in the 30-minute chart, there you can see yesterday down to the low of Wednesday, and then the market moving, and also through yesterday's high as well. war is good for the markets. That's the way it works. And of course, we've got the escalation going on at the moment. And in the US dollar, this continues to move to the upside. It's good for the dollar. Again, war is good for the US dollar. And moving higher there. And obviously it's going to impact on the metals. Well, more so silver than gold. So let's have a look at those. And yesterday you can see silver down, as I mentioned in yesterday's. They may rally back today with a bit of support from gold. I'll show you in a minute why. Yesterday it was red all the way down until late on in the evening for the silver market and silver price. They tried a bit of a shakeout this morning, but there's been a bit of buying coming in and holding the market. Prices have moved off the overbought situation in the 30 minutes so free at the moment to try and move back up. But yesterday, gold ignoring the US dollar because of uncertainty that we've got globally, geopolitically, and that being allowed to move higher up to the 89% retracement that we put in yesterday. So as we've hit that one, let's mark up another one. We go to the next line where they were selling, and again we can remove all of these, but we've got the next two upside targets should we need them. They're at 2703, so $2,700 is going to be the next upside target. And in the 30-minute one, now you can see consolidation through the London fix and overnight prices and escalation. Again, seeing the gold market move higher. However, in the gold-silver ratio, this moving to the high, as I said before, 90 has been a target for a long time for me in this, and we're just about to break through all of this resistance, or have done. So 90 is the next upside target for the gold-silver ratio. And let's just squeeze this up a bit. That's sort of the area where, as you can see, the silver price is likely to find some support on the downside. Just depends on the Russia-Ukraine thing, but 90 is possible. 90 is possible, even if it's a quick run-up and they slam the silver price to the downside, just so that they can pick up some bargains and the shorts can get out of their short positions that they've had for some time. Trump's done them a favour by being elected, where we saw the price being slammed. That's eased any losses on the short side, but I think there's probably another one, panic down, move down, so they can get out of a few more. But the suppression of the silver price continues, as you've seen there. Gold up, dollar up, that's which is inversely related, but of course silver being hammered down, taking the opportunity as the US dollar continues to move to the upside there. Right, let's have a look at yesterday's trades. Okay, so it's confession time. For whatever reason, I forgot to hit the record button yesterday. It is working now. I've hit the record button already. It's been a while since I've done that, but preoccupied with a lot of things. So unfortunately, all of the trades that I marked up and was going to discuss, the three here, I not much point in giving the rationale behind it, because I'd spent so much time drawing fib lines on there and etc. But hopefully today it'll be fine. Well, it's fine at the moment. It's recording, so for Mondays. But you can see there we move lower down to the low, and then we got to the 50 EMA, and this bar here. I think what I'm going to do is to actually put the volume on to these charts and show you some advanced techniques in the market alert to manage the trades, because there was volume. You can see the red inside of the green, and then of course the market reversing and then moving lower, and then we got the potential sell, and then when we got down to here again there was an increase in volume. So I'll probably do that in a minute when I finished recording. So let's just drag this across for the afternoon, and we just had, there you go, just the one trade there in the afternoon. We had some reds inside of greens, but the difference between these and this one is we've got red with resistance at the psychological level there. So again, I'll record these and then put a bit more detail in so I can talk you through how I read the markets. Now you can see that again at that DP, how you've got red inside of the green, bringing the market down, consolidation because it's sideways, and then bingo, up we go. And then we come back to the 50 EMA. Market's long in its sort of long term in the smaller time frame, as it were. back to the averages, and then drive through. Bit of profit taking there as you go through the psychological level. More profit taking, and then getting out of the trade because we're heading towards the close at 16:30, and then over. Well, not overnight, but the evening, the market finds support at the 20-bar moving averages and moves higher there. So let's have a look, see what the market's doing overnight. And coming up off the close, as I say, it's all become very bullish over the last few days. You only have to look at the daily charts and you can see this with the amount of volume. And the volume is key in trading for me and has been for the last 30 odd years. You can you can see exactly what the big traders are actually doing there. Right, that's it for this one and for this week. So have a great weekend. And next week we've got Thanksgiving, so it's going to be a patchy week. Wednesday half day, Thursday closed, and half day on a Friday. So only Monday and Tuesday really of any note. Okay, that's it. Have a great weekend, and as ever, thanks for watching. See you in the next one.